Welcome to episode 8 of the 5-Minute Investor, where Stockhouse columnists Jonathan Brown and me, Trevor Abes, each deliver a 2.5-minute stock pick related to recent news stories with investment implications. John, what kind of high potential opportunity have you got for us today?
Trevor, I'd like to bring you in on a trend I've noticed. With prices rising, dollar stores are getting a lot more attention. And we know Dollarama has traditionally performed well on the TSX. The company recently admitted that damages from the tariffs and counter tariffs between Canada and the U.S. and the U.S. and China has been, quote, manageable. The CEO even called it overall a very weakening economic environment, which is kind of concerning language overall, but that's fine. The news release that he was talking about their financial growth from the year earlier. Citi Research even just upgraded a couple of U.S. counterparts, Dollar General to neutral from sell. This happened a couple weeks ago. And they said that dollar stores like that and Dollar Tree don't have the same exposure to tariffs as other retail stocks would. Digging a little deeper, I just noticed that Dollar Tree and Dollar General have lost more than 33% from their stock value from this time last year on the NASDAQ and New York Stock Exchange, respectively. They both reported that their gross profits had declined. But Dollarama, however, up more than 45% since this time last year, and has seen some 21% growth since this year began. The one thing that might not look so cheap is the stock price. It's up over $170 Canadian a share. The U.S. stocks I mentioned, they're comparable. But there are dips to watch out if you're hungry for discounts. Should mention the American stocks are also up since the start of the year, so maybe they're showing a rebound, but Dollarama is already sprinting away. Once again on the TSX under the symbol DOL. I'd also like to mention that Citi analysts, they've warned that Walmarts and retailers like that are more likely to pass the burden of higher costs to consumers. I never thought of dollar stores as an actual deal, but this is one time Mom might have been right after all. So Trevor, what do you got?
Well, John, this week my attention is on prospective mining projects, specifically the initial 10 projects designated as priorities under Trump's move to expedite U.S. critical minerals development. Among these properties, 5 happen to be tied to publicly traded companies, granting investors an opportunity to build exposure and potentially benefit from regulatory clarity however long Trump is able to remain in office. The most attractive among them for small and microcap investors, in my opinion, is Standard Lithium, ticker SLI on the TSX Venture Exchange, market cap $403 million, whose Smackover lithium joint venture with Equinor holds 2 of North America's most attractive lithium projects. Smackover's East Texas project yielded North America's highest ever reported lithium brine grade at 806 milligrams per liter, while its Southwest Arkansas project houses a high-grade resource averaging 437 milligrams per liter and was recently approved for a Phase 1 brine production unit expected to generate 22,500 tons of battery-quality lithium carbonate per year once it reaches commercial scale in 2028. Total lithium production at Southwest Arkansas is expected to reach about 45,000 tons per year, enough to build over 5 million EV batteries, with a 2023 pre-feasibility study delineating an after-tax net present value of $3.1 billion US dollars, which is over 10 times Standard Lithium's market capitalization. With cash flow on the near-term horizon and demand for lithium expected to be rosy over the long term, despite the price per pound falling by about 90% since 2022, Standard Lithium seems to have a long runway ahead of it to continue generating shareholder value. The stock has added 224% since 2020. As always, you can find links to the articles from today's episode in the show notes, and you can find more investing insights on Stockhouse and the market online. The 5-Minute Investor is on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever you find your podcasts. Thanks for listening, and we'll catch you next time. The material provided in this podcast is for information only and should not be treated as investment advice. For full disclaimer information, please visit themarketonline.ca/disclaimer.